Hey, what's going on, guys? This is Alex Cook. So this is a special video that I'm shooting. I was originally going to shoot some content this weekend, but recent events in the market, this subject is just too important for me to wait on this. This needs to be addressed immediately. So GameStop is actually not going to be the focus of this video. So as always, when it comes to any type of content I produce, this is not intended to be investment advice. This is informational because I can't tell who's watching it. So I don't know what your risk tolerance is. I don't know what might be suitable for you. Take it just as information, do your own research, and figure out your own risk tolerance. Now, I am going to be talking about Wall Street bets. This is not just going to be an analysis on GameStop, and that's because, well, that subject has been covered extensively elsewhere. But this topic is now, it's getting out of hand. And there's been a lot of just very bad reporting on this, and that's what I want to address very specifically on this. So what I'm going to be discussing in this video is the Wall Street bets controversy. Okay, I'm going to get into that. I'm going to talk about why, you might be surprised by my opinion on Wall Street bets and, this whole finance meme community. And I'm also want to talk about, and again, this is going to be a controversial video, but I'm totally okay with that. I'm going to talk about why these so-called meme stocks might actually work sometimes. So, look, this is probably the part in the script where I'm supposed to say, hey, I have all these sheets of paper on my wall, so you should only listen to people like me. But I'm not going to do that. Okay, like if there's just one lesson that we should have taken away from 2008 or 2020, okay, it's that the experts can be full of it also. Okay, 2020 is an easy example. I mean, maybe a few events in the world with some controversy, maybe some bad decisions by some people, but let's rewind. Let's talk about 2008 also. Like, let's talk about this whole thing with credentialism and this just worshiping of credentials and trusting the experts. Like, are you telling me that I'm supposed to take Fitch or Moody's as gospel when you're just rubber stamping like absolute crap as AAA? Like, I'm supposed to just take this as gospel and just trust the experts and just bow down to the experts. World Health Organization, just tell me everything. Yes, of course, COVID is being passed person to person. Of course. By the way, they posted that on Twitter and they still haven't taken down that post. So the great experts, yeah, they failed us in 2008. They failed us in 2020, and they're failing us right now too. So let's talk about Wall Street bets. Look. Give me a break with this controversy about Wall Street bets. Like, Wall Street can be kind of elitist, but I don't think you need some type of special credential to have an opinion on the market. Like, look, are there bad ideas by retail investors? Like, do retail investors do retail investor things? Yes. Okay. Well, guess what? Professional investors make bad decisions too. Shocking. Yeah, maybe some retail investor got a little too crazy with options. All right. They didn't give you Theranos. Okay, retail money isn't what made WeWork happen. Look, give me a break with some of this stuff. I am no longer giving some people the benefit of the doubt. Like, some of the media reporting that's happened about Wall Street bets, I'm no longer giving people the benefit of the doubt. At one point, I'd say, all right, maybe they just don't have the full story, or, maybe they just didn't go. No, that's nonsense. You could just go on the website and just read it for yourself. I'm no longer giving these people the benefit of the doubt that, oh, maybe they just didn't know better. No, I think they're being willfully dishonest. And why? I'm not entirely sure. I think a big part of it is they need ad revenue, so it's easier to turn out clickbait that gets people really pissed off. So even if they don't agree with the article, they'll still click on it because it's controversial. But let's talk about this a little bit. So the whole idea that Wall Street bets is a pump and dump scheme. Well, that's just factually not true at all. But let's walk down this rabbit hole. By the logical arguments made to assert that Wall Street bets is a pump and dump scheme, you could say that about any type of sell side research. You could say that about any type of buy side firm too that publicly talks about his positions. Like when David Einhorn announces that he's long or short of stock, or Bill Ackman, whoever, Chamath. All right, people listen. Okay, is that pumping up? No. You can say it's talking your own book. That's not pumping up. So give me a break with some of this stuff. Actually, let me ask another question on it. Dude, CNBC, why are you wasting Chamath's time? Like, you have one of the best investors in the world right now. Like, why are you wasting this guy's time? Like, he doesn't have to go on your channel. Like, you know this. Like, he does not have to go on your channel. Like, he doesn't need more publicity. Like, you need him to come on your channel. You need him to come on your channel and drive ratings. Like, the guy already manages a lot of money. Okay, he does not need your publicity. You need him to go on your channel to drive ratings. Okay, so I don't know why you're wasting this guy's time. All right, let's move on to another thing. And this is like the more ridiculous one. Actually, I don't even want to mention the name of this publication because I don't want to give them any free clicks, but a publication said that Wall Street Bets has, like, this is some ridiculous. They're saying, like, it's a neo-Nazi, like, white supremacist group. Like, give me a break. Like, give me a break. The whole, like, everyone that I don't like is Hitler. Like, that stuff's been played out for a long time now, and you're just beating into the ground more. And, like, actually, the worst part is, like, when there really are real instances of discrimination, now you're taking attention away from that. Like, you're taking attention away for, like, when someone actually does need help, like, when someone actually is being discriminated against, now you're taking attention away from that. So, like, honestly, you should be embarrassed. Like, you should be embarrassed. Like, if you're one of these guys that thinks Wall Street Bets is, like, a fringe, like, radical group, just unsubscribe, throw your computer in the trash, light the trash can on fire, like, just go away. Just go away. Like, this is why I'm not on Twitter. Like, you can't make any nuanced points on Twitter. It's all, like, who can come up with some witty one-liner. Like, if I said this on Twitter, they'd be like, oh, so you're okay with white supremacy? Like, get out of here. Like, go away. Get a real job. Get a real job. So, look, that is ridiculous. And what really got me fired up, and made me want to make this video now and not wait till the weekend, is Discord. Man, you guys screwed up with this one. I'll tell you why you screwed up, but you guys screwed up with this one. Discord banned Wall Street Bets for hate speech. Like, are you kidding me? Like, give me a, like what are you even talking about right now? Like, I don't know if it was from this article that I mentioned, but saying this, oh, well, someone write an article, like some random blogger said this, so we're just going to take it as truth. Look, I don't know why they did this, but in a way, I'm actually kind of low-key glad this happened. Not because I'm against Wall Street Bets, because it is now forcing us to do what we should have done all along, which is decentralize the internet and take more control over our content. Look, I mean, I think some of these tech companies have gotten out of hand with how they've been controlling the information flow. So I am kind of glad this happened. Short-term pain for long-term gain for us to get back to, well, really how the internet was for a long time. Before the 2010s, when you had like, all the mega sites like the Facebooks, the Twitters, the internet for a long time was a lot of small decentralized forums, small chat groups, and it was all independent. Like, you couldn't shut it down because there's just too many independent sites. And I think we're going to go back to that. And this trend is only accelerating even more. So, hey, Discord, you played yourself because they're just going to go somewhere else and it's not going to be you. So you just lost some customers. But hey, you do you. You do you. Now, I will say one little critique is I know I'm gonna piss some people off with this, but this just needs to be said. It's not a hater comment. I say this well-intentioned. I'm not a big Robinhood fan, but I'll tell you why. Is you can't ACAT transfer. They had some downtime when the market was crashing in March 2020, and I don't find that acceptable. That to me is a big no-go. I'd rather go with someone like Schwab or TD Ameritrade. Like you can do searches from Barron's talks about what they consider what they rank as like the top online brokerage firms. Like, do some research into a company like those because you want someone that's been around for a long time. They're commission free, by the way. I'm not getting paid by them at all to say this. I'm just saying, they're commission free. Just do some research on your broker. When it comes to your money, like, don't play games. Like, don't play games. Go with someone who's been doing this for a while, who's been through multiple recessions. Okay, you want someone who's been through multiple recessions. And, hey, if Robinhood gets there, good for them. Just right now, there's other brokers that I would steer you guys toward other than Robinhood, although I know that's the Wall Street Bets favorite. Go back to the content, though, and the whole idea of the internet being more decentralized going forward. Like, this is why I now post videos on Rumble as well. And I'm launching a Substack. I have a Telegram. Definitely sign up for my Telegram. I'm going to include the link down below. I don't have a Twitter. I just told you why I don't have a Twitter, but Telegram, we'll have some good discussions down below. It's a way you can stay in touch with my content. And if YouTube ever decides to nuke my channel, I'll post wherever I'm going to be going to next on my Telegram, so you can follow me there. Sign up for my Substack too. I don't want to put my career in someone else's hands, so that's why I'm not just going to put all my eggs in one basket with YouTube. So going forward, though, on why these meme stocks might actually work sometimes. So I actually have a story behind this. You notice lately I've been talking a lot about crypto. Okay. How did I first hear about Chainlink? You might laugh, but like dead serious. I first heard about it on freaking 4chan of all places. Now, there's a lot of horrible ideas on there. Well, there's also a lot of horrible ideas on any other type of research, including professional research. But when I first heard this idea of Chainlink, it's what caused me to do some digging and then connect the dots. Like I didn't just go on it and I'm going to buy it because some anonymous poster said so. No, like I did some research, connected the dots, and I decided at the time, all right, I think this might sound promising, but that is how the idea was generated for me. So I think what is interesting about these meme sites is they can be good for idea generation. Now, you still need to do your own research. Yeah, I'm not saying don't do your research. I'm not saying just blind buy whatever some dude says, but I think it can be an interesting source for idea generation. But let me tell you why. I think one of the advantages to these meme sites is you don't have some psychological biases that you have in other forms of financial content. Now, maybe it has its own type of psychological bias, but you don't have the boss is always right. All right, you don't have the worshiping of consensus, for lack of a better term. So if you want to know what I mean by that, just look at earnings estimates. They always cluster around some type of average because no one wants to deviate from the average. Because if they're wrong, they say, oh, well, everyone else is wrong too. So no one actually wants to take a stand on things. Whereas like on these websites, like you don't even know who these people are. They're basically just anonymous screen names. Like you don't even know who these people are. So like they have no reputation on the line. They might as well just say what they really think. And sometimes they say something that's actually kind of salient and stands out. So you kind of have to do some digging, but it's kind of refreshing. Like you're getting some fresh ideas that are not just the Wall Street consensus, not just the CNBC or Bloomberg consensus. Like you're starting to actually get some fresh ideas. Now, you have to sort through it. Don't YOLO your life savings on some out of the money options. All right, let's actually talk about the YOLOing options a little bit. Manage your risk. Okay, don't YOLO your whole account. Now, let me tell you about Nassim Taleb or Taleb. Dude, I don't know how to pronounce your name. I really respect your books. I don't know how to pronounce your name. So what he actually does is he will buy some out of the money options and he goes into them fully knowing, like fully emotionally, like I'm going to lose this money. Like he is emotionally detached from the money. Like he goes and buying out of the money options saying, all right, I'm going to lose this. It's an acceptable loss. And that is part of his risk tolerance. But occasionally, sometimes one of these options hits it so big, it totally outweighs the loss of all the other ones. It's like venture capital. Like if you have a venture capital fund, maybe you seed 20 companies. All right, 16 of them just go completely to zero. They just go totally bankrupt. 3 of them, they do okay. And the next one, that one is the next Starbucks. And it goes crazy. And then all your other losses are totally like irrelevant because that one company did so well. That's kind of what he tries to do. And also a lot of his investments are very conservative too. Like I'm talking like straight up bonds a lot of the time. So that's maybe one option is, if you want to YOLO, okay, like we're all adults here. Like I don't know what your risk tolerance is, so I can't get too specific for you guys, but what I'd suggest is, if you want to build a nest egg, do that with very boomer style investments. And if you want to YOLO, okay, like, look, I like to go into Las Vegas. I like playing poker a little bit, but, do that with money that you're emotionally comfortable losing this money. That if you're going to YOLO options, do that. Now, notice, I'm not like most financial, people and say, oh, never trade options or never buy crypto. It's bad. It's the devil's work. It's black magic or something. No, I'm not saying that. I am saying, look, I do it myself. I have crypto. I have some options, but I am managing my risk too with it. Like it's not my only investment. It's part of a bigger picture. That is how I would think through this process. So I want to close out with a few thoughts. Those are my main points in this video, but let's talk about this elitism again on Wall Street. So I remember this was around 2012 or 2013, I was talking with a hedge fund analyst. I'm not going to mention the firm. So JCPenney went bankrupt, right? I was talking with him about this time. I was like, yeah, I'm not really too sure about JCPenney. He goes, oh no, JCPenney is going to do great. I'm like, okay, just curious. Why do you think so? He goes, well, it's because the Fed is keeping interest rates down, so people are going to buy more stuff. I'm like, okay, but that's not how the real world works. It's like, well, no, the Fed's printing money, so people are going to buy more stuff. I'm okay. No, I know how interest rate works. I know how bonds work. I know how, in theory, the money goes into the system. But like, literally, no one is saying, "Hey guys, listen up. Hey, bring it in real quick. All right, the Fed just cut rates. Let's all go to JCPenney and buy jeans." Like, literally, no one is saying that. Like, that conversation never happened. So, Wall Street, I think, sometimes kind of gets too wrapped up in its models, too much into a consensus mindset or a the boss is always right mindset. You can see it on the culture of firms. Like, if a firm is a passive investing firm, then, all right, well, passive investing is gospel. You can never beat the market. And if you're an active investing firm, then, oh, yeah, we'll always outperform in the market 100 million% of the time. I mean, our alpha is going to be like 10 bazillion. Okay, so it's the boss is always right. That's how it works. Like, the boss comes up with a conclusion and the analysts backfit data to meet the predetermined conclusion. I'm not saying it's right because it's not right. I'm just saying it happened. All right. And this is why people are turning to independent research. This is why these communities come about. Look, the best thing, honestly, like if you wanted to snuff out Wall Street bets, the best thing you could do is just put out better research. Like that would get rid of the community overnight. Now, people are always going to make investment clubs. People are always going to discuss stocks. Honestly, I'm okay with that. I'm glad with people taking money into their own hands. And, some of the controversies with Wall Street bets that, oh, this guy turned $100,000 into zero. Look, these guys make fun of them too for taking too much risk. So I think, you can say the same thing about gambling addiction. Like, I think gambling should be legal. I think people who have a gambling addiction, they should seek help. And I'm glad that there's addiction resources for it. But like, let's not throw the baby out with the bathwater. I mean, some of the conversations about this community have gotten silly. That's why I want to address this. And again, like, this is why I'm not on Twitter. Because if I said something and someone tried to like just come with some witty one-liner, it's not that I'm offended. Like, dude, I've been in the Army for like 4 years. I was in finance for 7 years before that. There's really nothing you can say that's going to offend me at this point. Like, if anything, if I get like a cool insult, I'm like, man, that's pretty good. I might write this one down. It just, look, I don't think it's a productive discussion. And like, these are important topics that we're discussing. Like, we need more serious discussions right now. Like, we need less of this. Just try to like come with some witty one-liner. Like, there's a lot of problems in the world. All right, we need some adults in the room to talk through it. And that's what I'm trying to do with this channel. So if you just want clickbait, like, sorry, that's not me. I could get way more views putting out clickbait, but that's not me. But anyways, if you enjoyed this, hit subscribe. Definitely check out my Telegram as well. I'm going to include the link below because I'm going to be putting content out on other platforms as well. So stay tuned for that. Anyways, it's definitely going to be a controversial video. I want to know what you guys think. Thanks for watching.